So today we're going to be talking about the opening range gap model, and I'm going to be showing you some executions I took from 2 different days, going short on the first day and long on the second day, and how I called them all live and ahead of time in the Discord. So let's get right into it. Starting off on the first day, 12th of May, I wrote in the Discord, opening range gap quadrant, held resistance, post 9:30 a.m. protraction. I am now looking for the 28,945.00 order block to be reached. But do not forget about all-time highs. They'll be back later in the week. So this is that chart down here, and if we just expand it up here, we can see that this is what I'm talking about. Okay, so above here we have our buy side liquidity and we have our inefficiency, and we can see that from 9:30 open we've traded up, had that protraction higher, sweeping this buy side liquidity into this imbalance. And then also looking at these thicker Fibonacci levels, the black lines are the low and the high of the opening range gap for the day. Beige is the midpoint, and these two pink levels are the lower and upper quadrant. And we can see that 9:30 just stabbed up above the buy side into this inefficiency and only made its way to the lower quadrant of the regular trading hour gap, not even being able to touch the midpoint before, as we can see here on the 1 minute, just started shifting away and shifting its delivery program from buy side to sell side. So then moving on to the next slide, which is the same trade, we can see here that I caught a little micro scalp during this run lower. So how did I position myself in this? Well, we have this low to this high. My draw on liquidity is still here, which is this order block that I mentioned. So even though we've ran far, my objective that I was expecting was unmet. So I can look for a protraction to then look for a sell-off. So we have our low, our high, and we have retraced up into a premium, into this fair value gap and this old mitigation block. From there, we've had this short-term high be created, and then we fell below this order block and fell below this breaker. Okay, so I sold short as we fell below the order block, and I sold short at the midpoint of this daily fair value gap, aligned inside of this breaker here, as well as the fact that it's very hard to see, but there is a tiny little inversion fair value gap there, which I also used for entry. And I placed my stop loss above the swing high and just let it run to my target for a 2 or 3 hour or whatever this was. So this was just a quite simple scalp. But now remember, let's go back to the first post that I said. But do not forget about the all-time highs. They will be back later in the week. So then if we move forward to the screenshot from the 13th of May 2026 on a Wednesday, I said, for a bit of an early London session analysis today, I'm looking for NQ to reach all-time highs. When we see the Asia session use the midpoint of the daily fair value gap for support, and now I would like to see a continuation of Asia and the protraction respect the high to upper quadrant of the daily fair value gap to send prices to all-time highs when the time is right. So we'll just move on to the actual chart here, the screenshot of the chart anyway. So this rundown lower was this first trade that I took somewhere within here back to this order block, okay, which is practically the low of this fair value gap. And now remember, I said I don't think that this is a run lower and be wary for a reversal to all-time highs later in the week. Well, we can see just as we made that low inside this order block here, we then reversed very sharply and started trading higher. Okay, we have the Asian open here, and Asia opens and it has this small protraction, bearish protraction inside of this BISI and this old SIBI, and then shows respect right at the midpoint of this daily fair value gap and starts to rally higher. From here, we've created this new fair value gap, okay, in a discount from where we are currently, which I wanted to see prices retrace into to fill fair value and then allow smart money to distribute and sell above these highs here. So then going further into the day now, 8:55 p.m. Going into the AM session here, I would like to see a deeper drop into the 4-hour imbalance that is resting at the high of the daily fair value gap, plus ideally the gap higher created at 9:30, then I would be looking to see if the markets give the shift in delivery to buy side. Trendline phantom directly below Asia and Monday high after the sell side has completed its business, and we're at all-time highs. So it seems like a pretty strong draw to me. Okay, I was being facetious here. So if we go into the next screenshot of this screenshot of price action down here, we get this. Now you remember when I first called that I wanted to see this gap be traded to, we were here, okay? But price did not trade instantly into it and kept running higher and higher up until about the New York Open. And now we've created real close equal highs. 1, 2, 3, 4. Okay, so this is a lot of engineering of liquidity. And then from there, we can see that we've just had this bearish consolidation where we're making lower and lower highs. And then we have then our New York Open. We created a short-term high here, and then with the 8:30 news, we just started dropping off. And we dropped off below the London low, so we have paired sell-side liquidity to go long. But now that is not enough. We also wait for it to get into our point of interest, which I had mentioned prior is this 4-hour fair value gap, as well as the high to the upper quadrant of this pink shaded daily fair value gap, because we don't want to see it go below that, as this candle here has already used the midpoint of this fair value gap. Okay, so when we're down here, what has happened? Okay, we have lots of buy side liquidity all resting up here after sell side objectives have already been taken. There's nothing left to do down there. We've traded up higher and we're real close to all these other equal highs now, and as you can see here in the 5-minute, we've created this real clean trend line phantom of these highs that didn't make higher highs. So this is further engineering of liquidity on a fractal basis, and they have positioned this right below the Asia and Monday high. So there is lots and lots of liquidity to attack up here. And if we're playing the markets, we want to look where is the most damage in the markets right now. Well, it wouldn't be on the sell side, because sell side has already done its job yesterday. So today's day is to take out these willing participants up here. Now, when we drop off from the New York Open and off the CME 8:30 news, we drop right into our point of interest, and we're right below the midnight open as well. So on 3 different bases here, in terms of reference to time, we are in a discount, as well as we are in a discount array, okay, while we have all this buy side liquidity that we want to target. All right, so that is how we are framing our ideas, as well as not to mention that we have swept a previous session low. Okay, so now let's move on to the actual real charts and take a look at the execution. So now when looking at this chart, we're starting just here on the 15-minute. A few extra things to add for this. So obviously this was our discount objectives, okay, for this setup. We have this pink shaded daily fair value gap, and then we also have this 4-hour imbalance as well, which I mentioned that we were using. But now at 9:30, we can also go on the regular trading hour charts time frame, just like this. And I know it's a bit hard to see with all of the other stuff there, but this candle's close, where it closed at the black right here, is the previous day's close, and then where we open at the top of the black right here is the current day's open. So we put a Fibonacci on these levels and we measure out the quadrant levels of this, okay? Then when we go back to the electronic trading hours, we can see that we have even more detail now. This detail being that, yes, we're looking for this protraction to go into this daily fair value gap, which also holds this 4-hour imbalance inside of it. But now we have also added the opening range gap quadrant levels to hold support on price. And as we can see, price is here at 9:45 and 10 o'clock dip and touch the low of the regular trading hour gap, but it's just going to as low of the midpoint of the daily fair value gap, okay, before it's wicking away and bodies are closing above the lower quadrant of that regular trading hour gap. So this is also used as a point of interest in conjunction with all these other point of interests. To add further confirmation to the setup, as we've gone down, we've swept the London low, which was here, like I mentioned. We continued to travel quite a bit further, and as you can see here, we did not meet the Asia low, but we got very close, okay? However, if we open up the ES chart here on the bottom, we can see that while Nasdaq failed to make a lower low than Asian session, we can see that ES did in fact make a lower low than the Asian session. So therefore, this is a cracking correlation and a bullish SMT divergence, which gives a lot more confirmation to the move, and that we are about to see smart money enter longs into the market as they're accumulating. And Nasdaq making the higher high while ES makes the lower low indicates to us that Nasdaq is the leader in this run here and is on the side of relative strength. So that is that when it comes to all the setup purposes. Now let's jump on the 1 minute time frame and look for our execution. Okay, so once we're on the 1 minute time frame and all of these higher time frame objectives have been met that I've been mentioning across this whole video, now we're just simply looking for our entry purposes. Okay, and using this model, we're using the first presented for value gap. So as we can see, 9:30 opened here and it started trading lower, and right here at 9:35 we created this first presented for value gap. Okay, since 9:30 we started dropping off lower, made that low and that SMT at our point of interest, and then we had this sharp rejection higher, came back lower, made a higher low, and then we're in this macro period here, and just as we create that swing low in the macro, then we come out of the macro and just start expanding, and I took my first entry inside this first presented for value gap as doing all this on the downside, and then coming up here and getting back into that first presented for value gap. This, for this model at least, indicates a shift in market structure, where we don't expect the first presented for value gap to be rolled on over and then used as resistance, because we are bullish, so we do not expect it to be used for sell side delivery. Yes, you can use these here, which admittedly on my other account I did actually sell long down here, but that is for more advanced teachings, to be able to get in down here. So I just thought for this model we'll keep it real clean and cut and just show you exactly the example of how to use the opening range gap levels, as well as using like for setups, draws, context purposes, and then also the first presented for value gap as you're changing the state of delivery, and even can be used as its entry mechanism. So I entered long here, price retraded into this little short fair value gap, ran a little bit higher, and then came down, stopped out this gap. At this point, my stop loss was all the way here, right below the midpoint of this 50% level of the opening range gap. And then as we got into this next macro, we just started expanding higher and higher. I accidentally put on a buy here. I had a buy limit above this high at the low of this old SIBI, which actually put me in another contract long, which I didn't want, but I didn't realize for a while. Then I sold 2 contracts short there to get out of that and reverse that. And then at this point, my stop loss was below the first presented for value gap, so I was in break even and I had taken a partial. So this trade was just clean cut for me. I had set another partial above here, as this is the highest high since 7 a.m. open, right? So this encapsulates the whole New York session. We can look at this as accumulation, manipulation, distribution, like a power of 3, but just specifically for the 7 a.m. session from 7 to 12. And you can just look with your eyes how perfectly we have accumulation, manipulation, smart money reversal, and then distribution, okay? But admittedly at this point, after I sold here, it was 11 o'clock at night and I was getting ready to go for bed. I actually did record the execution of this video, and I wrote right here saying that I'm going to go to sleep and I expect prices to continue, but not until the next macro, which if you look here is the next macro, which is exactly where, after all this consolidation inside this premium SIBI, we started expanding higher and higher. So my first partial went right there above that high, and I was asleep, so obviously I didn't roll my stop. I was already at break even, but if I wasn't asleep, I would have rolled it up below this low. And then, as you can see, by 1 p.m. in the afternoon session, the high of day and new all-time highs was reached, and I got completely out of my trade. So that's above these highs here. So this trade, at least from where I entered on this to showcase you guys, as I did enter down further down here, so this was an even larger trade for me on my live account. But this trade overall was a 7R, okay, so very impressive and really simple using this model. 7R, and we captured about 250 handles. So anyways guys, that is about it for this video. I will touch on more in the next time with you guys. I hope you found value. I am open to answering any questions in the comments, and feel free to come also check out my Discord and my Telegram if you guys would like to have any of this analysis live and before the markets even start, to post it to you so you can have a nice baseline of what to work with for the day. Real friendly community anyways. Come check us out, whether you just want trading or just love to chat about trading. So anyways guys, take care. Peace.